If you've ever been searching for one video that will encapsulate everything going on in the financial markets, in the economy, what goes on in the news media, and how the majority of people get the markets wrong time and time again, this is your video. We're going to look at the stock markets from around the world, but of course the US as well. We're going to look at the real estate cycle. We're going to look at commodities, in particular the US dollar, which has a very big impact across the board. And of course, Bitcoin and a little on the cryptocurrencies. But the reason why we are looking at the macro cycle and the traditional markets is because that is where the majority of the money is. Now, I might title this thing something like the biggest warning for all of these other assets, but the main thing that I want you to take away from this video is that it looks like things are going to get very, very explosive. And I don't think many people are prepared for how crazy the markets are going to get. This isn't going to happen tomorrow or next week or not next month. It might even take a little more time than that, possibly into late 2024. So if you have been a subscriber of the channel, you might understand where we're going with this. But what I want to do in this video is bring it all together for you. Look back on how we've been able to get to this point in the video and on YouTube, because it's not like it's just happened overnight. We've been following the markets for many, many years now, looking at where we've seen significant lows form in the market and how we've been able to forecast these and act on them so that we don't miss out on the opportunities that continue to present themselves in the market. Because the worst thing that we can do as investors is continue to wait on the sidelines in the face of a bull market. That's an old quote from a very, very good investor. All right, so what I want to begin with after you've hit that like and subscribe button, probably remind you throughout the video, is just be obviously as real as possible with you, because I think things are going to get ridiculous over the coming years and then lead into a mega collapse. Many of you who have been here for a while understand this, but I'm bringing it all together in this video for you so you can get a clearer picture of it and use it as a reference point to come back to in months and years to come from here, because that's essentially what I've been doing on Twitter for several years now, as I'll show you in this video as well. We're going to start with the real estate cycle. Now, if this is the first time you're seeing it, great. At least you're now exposed to it. We are in this stage of the real estate cycle, heading up into this crazy move to the upside across all markets. It looks like we're going to head into a mania phase. Now, as I said, if you are new to this or you still don't understand it, just know that there is over 200 years of data that has been put together to give us the understanding of the 18 to 20 year cycle here in the real estate market. And we have to respect that amount of data and the real estate market, because that is where the most amount of money is. Over $300 trillion in the US is in real estate, whereas we look to the stock markets and it's nothing near that amount. So everything is based on where the most amount of money is. Think about Bitcoin and crypto if you're only from those markets. Bitcoin's moving, it's the biggest asset in the cryptocurrency space. Bitcoin has to move for everything else to move as well from a macro perspective. Short-term pumps, they're going to be in their own mini cycles, but of course the longer term moves are all based on the broader picture where the most money is. We've gone through this particular area of the cycle. We're in this stage of the cycle now, and come over the next couple of years, we're probably going to go into this really crazy peak. And I've been pointing out on Twitter, X, how this era of very easy money occurs. We're seeing it in many countries around the world, banks and the government. So stay up to date with that. I've left all the links in the YouTube video description for any of the resources and things that I'm referencing in this video. This, as I said, real estate, looking somewhere around this particular time frame here, which is why I've titled the video something like a forecasting over the next 5 or so years. Because after this crazy mania, it leads to a crazy collapse. And that is going to be very, very difficult for many of us. If we get this timing wrong, which I suspect the majority will, because this is how these cycles play out time and time again, it's going to be even worse for those people. So I don't want people getting screwed as the markets go up, which is why we've been looking at investing while the markets have been down. And I want to get to that in this video as well. So where do we currently sit for the stock markets? Well, for the SP 500, we're almost 5% from a new all-time high. Some of you may recall that I talked very heavily about the March low. This was the banking crisis that should have collapsed the markets. We know many of our favorite traders, investors, YouTube faces, media, even the biggest business people in the world, your Elon Musks and things like that, were talking about a recession, how the markets had to collapse. Now, putting the recession aside, because we don't trade the recession, we trade the charts and the price data here. This was the extreme low to get into. It gave us all the signals we needed to get into the market, no matter which market we were in, whether it was the stock markets or if we wanted Bitcoin or even looking into real estate as well. This was a key pivotal moment in all of these markets, March 2023. You might ask why? Well, we had a low in October of 2022 based on a lot of the rules that we use with our own trading and investing. You can find more about that with TIA Premium, but that aside, for our education and the chills like that, the point is we had extreme fear at this point, yet we had already seen a price low. So we're getting an understanding of market sentiment. The money is telling us that even though there was extreme fear, the price was higher. That's a key point to understand. And you'll see this across all of the markets that we are looking at. When you see these higher lows, it is go time. And the majority of people don't know this, which is why the market stayed down for a period of time after that. Eventually, some figure it out. We get the boom, we get a retest, and it looks like we're going on for another boom. And we will most likely get a new all-time high. Of course, I don't have that crystal ball. I can't guarantee anything 100%, but things have been working out pretty well to a T at this stage. And this is all building up into that big mania, that big boom, because most have missed out on these prices and they're waiting for the market to come back down to these lower prices to get in because they don't feel as fearful now at those lower prices. But the market doesn't always give you that many opportunities. It gave us an opportunity right here and it just took off from that point. So a lot of people missed out again. They were hoping for lower prices. But as I said, as these moments unfolded through October 2022 and March, I didn't think these lows would get broken, and now I definitely don't think they'll get broken in this cycle on the way up to new all-time highs. After that point, we'll reassess. But where we currently sit, S&P getting very close to that new all-time high. For the NASDAQ, also getting very close to that new all-time high, 4% away from the top. And this is actually looking a little stronger than I had first anticipated going back a year ago, looking at the low in October of 2022. We had the higher low, a banking crisis, higher low, debt ceiling crisis, and so on. We got the big pump out of there. Now we had another low here, which was again a higher low, 4% from a new all-time high. Pretty likely that we're going to get to those prices probably before the second half of 2024. So that's the US for the S&P and the NASDAQ. Similar sort of thing for the Dow Jones. It's crossed my number one here, so that was a bit of a price range of resistance. Got back above there. Still got to wait for a little more time and some consolidation, looking for number two. And then eventually, I think we're going to hit a new all-time high for the NASDAQ as well. Now, we can look at the Russell 2000 just quickly. As I said, I'm bringing everything together here for your one big video here. Essentially, we're looking at all the fearful points, how this develops, how this unfolds, and how many miss it, and how it builds to get into a big mania boom for the broader markets, talking the traditional finance here, the S&Ps, NASDAQs, and any of our markets around the world, depending on which country we're from. This, as just a small piece of the pie, was there was a lot of fear that the Russell was going down. These are the lowest, smallest 2,000 stocks in the US, and that this should lead all the markets to collapse. It bounced off the previous bottoms and is now back above these significant levels. The main point I'm saying here is there was fear here telling us that why the rest of the markets had to collapse based on this. It didn't happen. Always just follow the charts. The VIX, another deal here. We're back into the bull market zone. There was a lot of fear when the market ran up, but again, it started to trend back down into this zone. So I'm a little bit beyond the scope of going through every single indicator in this video, but if you have been a subscriber, I know I've mentioned it a few times, please hit that subscribe button. And if you want to unsubscribe in the future, by all means go ahead. But we've covered reasons why the VIX is so important when it gets into this bull market zone between roughly 11 and 17. And it's done so again with lower highs forming here. Is that going to continue forever? Of course not. We'll probably eventually start to come back out and push into higher volatility, but I think that's a long way off at this stage. So that's the VIX. We can also look at other major economies around the world like Japan. Japan's the third largest economy in the world behind the US and China. It recently, over the last couple of days actually, hit a fresh high, which it has not seen in 33 years. Can you believe it? 33 years. Yes, it had huge boom in the 80s, huge collapse for a couple of decades after that, huge inflation. What's happening to Japan right now? Well, it's coming back to try and test that previous old all-time high of around 1989, 1990. So a very long time ago, and it is climbing. You can see those higher lows on a very macro scale here. The markets around the world are doing very, very well. Brazil, 11th largest economy in the world. We all know about BRICS. That's what the B stands for, Brazil. It is heading towards a new all-time high as well. So we're seeing this across the board. Now, I could go through basically every single chart and show you how these markets are continuing up. The main one, which many are pointing to, that is not continuing up is China. But just remember, China is controlled. They only show us what they want us to see. And in terms of the market itself, it has gone in its own booms throughout the last decade. You can see we had a pump into 2015 and then a pump into 2021 as well. So it's not as fearful as many might think. Now to the UK, another massive economy around the world. It is trading around all-time highs and has put in a new all-time high in earlier this year as well, in 2023. So we're looking towards this eventually breaking to another new all-time high. Following on from that, we can start to assess what happened, what went wrong for the majority of people back in 2022, missing the lows. And like I said, some of the best business people, some of the best minds, the best inventors of our time also get it wrong. So I'm just bringing this up. It's not to say that I'm right and they're wrong. It's to show you that even you can do this. You don't have to be anyone entirely smart, inventive, or anything like that. You just need to follow the rules and follow the strategies that W.D. Gann has left us. And of course, just looking at the analysis, looking at the market sentiment and trying to uncover or really just see how the masses get it wrong so that you can get it right for your own portfolio. In this case, I talked about this a lot at the time. Now this is May. I even looked at this in 2022 itself. This was 8 days from the exact cycle low. And I know many might still say now that, well, there's still time for it to collapse. Of course, that's always the possibility. But if we're waiting for that, as we pointed out before, if we continue to wait for markets to collapse, we miss out on a lot of the gains to the upside. We miss out on a lot of the move if we don't have rules to understand how the market forms its bottoms. People are waiting to see what happens in the economy. Even Elon Musk is talking about this recession will last until till spring of 2024, which is about 6 months away. And this was put out 8 days after the cycle bottom. So the worst news typically happens at the lows. And that is another example of the worst news happening at the lows. We had the banking crisis happen at the higher low, and we had things like this. This is the biggest minds of our time telling us that we've got a recession at the bottom of the market. So it's essentially like doing the opposite to what some of the best minds, I would say, happen in the market. Not just my saying, it's what happens at the time. This happens cycle after cycle after cycle. Speaking of cycles, this is what we're looking at here for the emotions. So some of this stuff might get a little bit subjective, but I ask you to keep an open mind and just have a look at how this plays out. This was May of 2023. It's important to look back so that we can look forward. As I said in my bio, we study the past to forecast the future. And when I say I study the past, I really do go back and look at the past. Look at what people are saying at that time to get an understanding of how that affects us moving forward into the future. So if I get my charts here, this is a simple chart that many people may have seen before. It's very similar to the Wall Street cheat sheet, or essentially is exactly the same, except using a different line chart here. Many early this year were thinking we're in a bull trap. That was said time and time again. We're in a bull trap. We're in a bull trap. We're about to go down. And essentially, you had to wait for the market to collapse so that we can get in lower and then go and ride the market up. It seemed like we were more so in this stage of the market where we were in the bear trap. Now, it hasn't completely unfolded yet, so maybe we're getting a little bit early ahead of ourselves here, but as a long-term investor, that's what we need to do. And we have to have stops underneath the market, potentially underneath some of the critical low areas, and understanding where those critical low areas are key to keeping you safe in the market. So it seems like we're in this stage here, the first sell-off into the bear trap and starting to head out again. The first stage into the bear trap, so there's your sell-off and start to head out again. I don't think this is true. I'm not worried about this blue line on the side here. It's happened. The lines are way too soon. This thing is ridiculous. But in terms of the movement itself and the market sentiment, we're starting to move into this media attention, and then you get into that enthusiasm, which puts us into the mania phase. These things take many, many years to play out. As I've just shown you in the earlier one, the real estate cycle is roughly 20 years. So we get that sort of movement across 20 years. Now, do commodities also follow these cycles? They do follow their own cycles. In this case, we're looking at the US dollar and how this plays a very significant part on the rest of the economy and the markets continuing up through this later stage in the cycle. At the time on Twitter, I looked at the US dollar collapsing from this particular point. Now we can see the DX, or the US dollar, actually peaked a day after this particular tweet here. But I was looking at the possibility of this being a top because the news went absolutely ballistic. So keep an eye on what the news does at peaks of the market. That is the signal here. That's the takeaway from this entire point. Now, I've pointed this out many, many times on Twitter and of course on YouTube, but going forward, as I give you this warning over the next 5 years, we're most likely going to see these sorts of things get absolutely ballistic heading into the peaks. US dollar peaked at that time. And well, I mean, it takes time to see whether this was actually going to be correct or not. But yeah, you can see the market basically collapsed under 100 for a moment. It's risen again, double topped, and it's collapsed again. Now, I think from this point, we will be testing that 103 and start to break down from there. But of course, you can come back to this video in the future and see, well, was he right? Was he wrong? Give me some comments down below, take the piss, whatever you need to do. But essentially the same thing happened at the top. The same thing happened at this low, extreme bearish news. BRICS is here, USD is finished, market rallied, a little collapse here, and then it rallied again for a while. So keep that in mind as we continue to move forward. That's just one example. There's many more, but of course this video could end up being many hours long if we're going to continue down that path. Markets continue to head up regardless of what the news is. This is called the wall of worry. Back in March of this year, just after the banking crisis low, I just put a quick tweet out talking about all of the problems that the world has faced over the last couple of years. You can read it here. Regulations. We had interest rates. World War III, which was a fear of 2022. Russia invading Ukraine. Stable coins were going to collapse. Exchanges getting sued, potentially collapsing. China collapsing. We had Evergrande back in 2020 and 2021. Banking crisis, of course, we're up from that. Recessions, QT, the list goes on. And I have a list here on Twitter, which I update regularly. So if you want to stay in tune with that, go and follow my Twitter account, or as it's now known, thanks to Elon Musk, it's called X. But yeah, you can see how many times the wall of worry comes up and the market just continues to destroy any of these problems that many of us hear about and wait, which cost us a lot of money. So we've got a fair chunk of background that we've gone through. What's going to happen over the next couple of years? Well, as I've said, I think the market's going to go up, it's going to go down. But what does that look like and how do we take advantage of it? More importantly, as you become a longer term investor, you figure out that it's not just about making money, it's about keeping the money. It's very, very difficult to try and keep that money that we've made. And maybe if you've been through a crypto cycle yourself or an altcoin season, you'll understand that it is the most difficult part. Getting into an altcoin, great. Price goes up, everything's fun. Everyone's making profits, but it's all paper profits. So how do you keep the goddamn money in your account and not just paper profits on a computer screen? So just looking at this one that my brother has put out, you can also follow his Twitter and his YouTube channel, which goes into a lot of detail when it comes to trading on the short term with altcoins. And you can see some of the results, even now as I'm filming this, some of the results that our members have just been posting here with hundreds of % return. This is in the Discord, which you can find a link to in the top of the video description. But if you do want to learn more about trading or investing, definitely go and drop your details down below here, name and email address, so that you can get to understanding how these markets work from a long-term perspective and a short-term perspective as well. So this is what happened in 2022. We basically had a sentiment of the fear rising. Remember, we had a lot of fear in 2022, but what actually happened? Well, it's looked like it's been a correction in the market. It's pretty typical. These things happen all the time. And I definitely know from my first cycle in real estate and the stock market, you feel the same thing. My first cycle in crypto, Bitcoin, you feel the same thing. But it's staying with the market and understanding how this plays out over time that really separates you from the beginners to the experience. And you can really make something from these markets if you give it enough time. We're in 2023. We had extreme fear, but what did we see? A major recovery. So last year we saw a lot of fear rising, people getting worried about the interest rates, everything that I just went through in a couple of these posts here. But what happened? Well, the market corrected and gave us a good buying opportunity. This is not always going to be the case. It's not always going to be 1 year down or 6 months down, and then we get the bounce, which is why I bring you back to the real estate cycle, where sometimes these corrections can take a lot longer. They typically happen from the peak of the real estate cycle and then the collapse. That's when they typically take a lot longer. I say typically, it's not always 100% guaranteed. It could be quicker, could be slightly longer. All right, into 2024, sentiment. This is what we're thinking is going to happen based on what we've already seen. So I need to give you the background so that I can then help you out with the next year, what we anticipate based on what we've currently seen. Study the past to forecast the future. Sentiment, shift from fear to hope and optimism. That's part of your Wall Street cheat sheet. This is the Wall Street cheat sheet that many of you are probably familiar with. Hope, optimism, belief, thrill, euphoria. So this is the crazy part where many people get in and then they get crushed from that point. This is what we want to avoid. Avoid this period at all costs, buying in and just hoping that the market is going to do that and repeat again. We want to be positioned already by that point, which is why we're so loud through these periods here, through the panics, the anger, depression, as to why we thought the lows could be in for Bitcoin, for real estate, for the stock markets, that sort of thing. Now, I'll come back to this post here, but just looking at 2024, we're getting that shift, actual bullish continuation. 2025, greed rising, masses paying attention, bullish acceleration. So markets can push on longer than we expect them to. And it goes against everything that we're hearing about the economy and how bad things are for the majority of people. So we're not trying to take that away whatsoever, because there is the economy, there is people's there are people's day-to-day lives. How can they afford rent? How can they afford food? How can they afford energy with all of these crises going on? What does the market do? Well, the market's going up. And what our purpose is here is to follow the markets. We're not a news regurgitation channel or any sort of media outlet like that just bases themselves on clicks. The point for this is that we need to understand what we believe is happening next based on our analysis. So we're looking at the sentiment, greed rising, masses paying attention. So this goes into the next couple of years, a bullish acceleration. And then 2026, sentiment, extreme greed, mass participation. So it's paying attention, participation, hopes to get rich quick, FOMO, etc. Extreme volatility could look like this. So it doesn't mean that the thing just goes straight up. What can happen in these last couple of years, the mania stages that I was showing you back here, is that it can look like big volatile swings up and down that are very hard to continue investing with because of the extreme greed. When you get an extreme emotion one way, the opposite is also present in you because you think you could lose everything that you may have just gained. So it gets very, very tricky to trade those end periods. So we think this is just the beginning at this stage. Let's see how the rest of this unfolds over the next couple of years. So that gives us those few years to the upside. To the downside, let's continue to follow up with that on the channel. But just to give you a bit of an idea, what's happened in the past is that we have seen pretty big collapses from that point. And the fact that we didn't see the major collapse And it's going to sound a little bit crazy, but the major collapses in 2020 with the COVID drop, or the next biggest collapses in 2022 with the pullback here, leads me to think that many will expect a similar sort of pullback in the next cycle. But I think we're probably coming up to something more like what happened in the GFC. Top was 2007 into 2008, 2009. I think we're going to have something a little more extreme the next time round. And it's going to get very crazy. It's going to get very hard to understand. Is it coming now? Is it coming later in 2026 when there is that mass volatility like we saw at the peak of 2007? There are some pretty big moves to the downside, and that emotion gets very, very high towards the peak. So that's where we currently stand for this move into the peak. If we miss out on this, then things get a little bit crazy because of those emotions that come up later, the hope, the optimism, the attention that we missed out, and then we get into that mass participation. So just looking back on Bitcoin now, as we get very deep into this video, the Bitcoin post that I had here in March just after the banking crisis low was looking at this breakout being the disbelief. So this was the early stage, and many thinking that, well, we're just bouncing out of anger and moving up into this first high before we start to trickle out again into depression. But I went through it in pretty great detail in this video here, and I really do like to see a lot of the comments that come through at that time. So nothing against the people, there's no bad people, it's just the ideas that we are looking at here to analyze, because like I said earlier, study the past, forecast the future, and see what's going on in the market sentiment. Many were looking at this as being a complacency bounce for the NASDAQ, especially as the NASDAQ found a resistance and then broke through that resistance through June and July. It was quite common back in March to think that Bitcoin was going to collapse. You can see many of the comments here. As I said, don't worry about the people. It's just the ideas that we are taking into account here. They thought the markets were going to collapse, but based on everything that I've shown you earlier and the very big reasons for March being a pretty solid low, especially in the stock markets, reasons why I did not think that this would break down from that point, and why we think we're on that move to the new fresh highs. Now, this is a post from June, so coming up to about 6 months ago now, looking at the S&P heading to new fresh highs, the NASDAQ, the VIX going to the bull market zone, Bitcoin maintaining price and structure. Now, nearly 6 months later, it's heading to new fresh highs as well. You can see that this is probably that disbelief and potentially breaking out into hope in the near future, possibly into that early 2024, which comes back to this tweet from Michael here, looking at the shift from fear to hope and optimism. So that's how I'm piecing all of this together to give us an understanding of where we currently sit in that cycle, and that these cycles take a lot longer than the majority expect them to take. If there's another big takeaway, think about the timing from a macro perspective. The timing from a macro perspective gives us the insights that this will take a lot longer than many are anticipating. And then when we get to the peaks, it might go on for that little bit longer, but I think many will expect it to go on longer at that point, not realizing how far we've come from those lows in the cycle, and that a lot of time has already elapsed within this cycle. They get here thinking that it's hope, but it's more likely going to be thrill and euphoria getting towards that peak. Now, post from August of 2023, looking at the potential of 2 red months for BTC. We got those 2 red months, as we can now see from hindsight, but at the time I was posting this in real time, looking for those red months here, Q3, and then the possibility of the move out of this zone. Now, for these moves in the market, it doesn't always happen exactly the same as the previous cycle. You can see here from 2019, market dropped off a little bit further, then broke out in later in that quarter into early 2020 as well. So sometimes things take that little bit longer, but in this case, we've got the pullback, we've got the breakout. That's what we were hoping for, and looking for a move towards $42,000 before that midpoint of the 4-year cycle, before 22 months. So you can see that the market took 22 months to get the breakout, but it tests the 50% point, and then the breakout. So this has been a pretty big theory that, not this actually, but this has been a big theory that I've been following up here on the channel, where I think we'll see 42K or a test of 42K before the halving, and around that sort of 18-month mark that will lead us into the first half of 2024. Now, I did say I was going to cover some crypto, but as you can see, the video is quite long, which hopefully you're finding a ton of value from. And you know what's next. If you do find value, it always helps to hit the like and subscribe to the channel. Leave us a comment down below with the most valued comment you've found from this video, something that you can use in your own trading and investing moving forward into the future. Now, in terms of crypto, this is typically what happens every single time from these markets. This is something that I posted July 2021. And it's always cool to have a look back on these things to see what happened from that point. Doge BTC was trading at 600 Satoshis. I was saying they're going to get bled out and drop to roughly about 100 or 200 Satoshis down at this level here. Basically just looking back at the charts, following the charts as we always do. And essentially, this is where we currently sit at roughly 200 Satoshis. So still looking back towards this period here of roughly 100 Satoshis. But essentially, you can see that's what happens in these collapses. They take quite some time to play out, especially on cryptos. And I think this is basically a precursor to what will happen with the rest of the markets after we see a pretty significant mania in them. Are they all going to act like this? Who knows? But as we can see from history, it typically happens time and time again. We can't say for guaranteed sure that it will, but essentially we have a little bit, well, a lot of data here that we can then hopefully sway the probabilities onto our side to remain on the right sides of the market as we go up, as we hopefully take some profits near the peak and potentially on the way down if we happen to be trading the short side of the market. We're going to continue to follow up with all of the macro cycles here on this channel. Hopefully you found some great value from it. If you have, let me know in the comments section what the best piece of information you found from this video is for you and how you're going to use it in the cycles coming up. Thanks once again, guys. I'll see you at the next video. Till then, take care and peace out.